prices as well. So now is the time to buy properties more than ever before. You let me know when it's time for the questions, né? And if you still want me to cover some more things. I can't hear you. I can't hear you. You are muted.
No, I'm saying you can go ahead. I was disconnected there a bit for a moment.
Oh, yes,
Yeah.
I saw you were gone. I thought maybe you are in the background somewhere. Okay, I was just explaining the difference between what happened now with the interest rate.
Yeah.
That the interest rate is so low now that for a person who's earning 13.2 can qualify for a property of 500,000. We come from a situation where the interest rate was up to 10%, where you had to earn 15,000, around 17,000 to qualify for 500,000 property. So now is the time to take advantage of the low interest rate and the properties that will be in the market, because more and more people are going to downscale, more and more people are going to sell their properties.
Yes.
And we've been seeing investors who had a lot of properties, and because of the economic conditions now, they are getting rid of those properties. So make sure that you have all the things in ready and in place, as you mentioned earlier. Your credit score must be ready. Your conduct with the bank must be correct, all right? And yeah, the banks will be able to give the bond. We are approving left, right, and center.
Yeah, I think there's someone who has raised an interesting question, especially for us investors, Bongile. He wants to know whether banks accept rental income as part of, or you did touch on that.
Rental income, yes, the banks take rental income as well. It must reflect on a bank statement for a minimum of 6 months, and there must be a lease agreement in place as well.
Yeah, okay. And with regards to the 2-year, if you're buying via a company or a trust, what's the arrangement there?
If you buy in a trust or a company, the banks will only give 80% bond. You must raise the 20% from your pocket. So yeah, there's the difference. They don't give 100% bond for the company, unlike in a personal name.
And then then there is the 2-year financial statements that the bank requires sometimes if you are if you want to invest via an entity.
Yeah, we still do. Remember, if it's a company or a trust, it depends how long it has been trading. So those are the basic requirements. The banks need 3 months, 2 years financial statements if it has been trading for 2 years. And the directors of the company or the trustees of the trust must also qualify for that particular bond. The reason for that is because as a trustee or as the director of the company, you're going to sign surety for the company or for the trust. So we must prove to the bank that you are also, they will be checking your credit worthiness and your affordability, because a company and a trust is an entity that the banks can hold personally liable for the debt. So there must always be a natural person behind that, an surety for that.
Okay, so basically you can still invest via a company or a trust, even if that entity has not generated income. You just sign surety on behalf of the entity.
Let's say you're employed, you're full-time employed, and you are signing, you then will use your salary, your payslip to qualify the company. You can even do application for the company that is still dormant. So a newly formed company can still buy property in the name of that particular company. But you as the director, you're going to use your salary to qualify for that.
Yeah, okay. No, that's great. And then do you have more, or must we take questions?
No, you can shoot, because the more you ask, the easier it is for me to know which direction to talk. Yes.
Okay. So ladies and gents, we open for questions. If you have any questions, you can just unmute yourself and ask the question. How is everyone happy?
I said a lot. Where have you been? I said a lot.
So you are very good. Have you touched on financing, on refinancing and advance?
Okay, refinancing, it's in a case where you have an existing property. So when you say refinancing, there are two different types of refinancing. You can buy property now. Say you buy a property for 500,000, and as you buy now, you register 700,000 for that property. So you buy it's 500,000, but the registration 700,000. You can even register it's 700,000 doesn't mean that the value of the property currently is 700,000. All that it means is that you registered more. So as the property value increases, you will have that opportunity to take the money out of the 700 that you registered. This is how it works. That one is a very easy one. Once you've registered more than the value of the property, and after some time, maybe 5 years or 10 years, the value of the property is beyond, or it's the 700,000, then you can go back to your bank. You say, I want the difference between the registered amount and the balance. And the bank can release the funds for you within a week or 2 weeks, depending on the requirements. And still, they must do affordability, so you must qualify for that. That's the first one. The second one is where we registered 500,000 now, and 5 years down the line, you have repaid the bond and you want to take the difference again between what you have paid and the value. But at that time, we only registered less. So we are going to do, then I can do that application for you. The advanced application you submit to the bank. The bank will come and do valuation on the property, and they will release those funds. In that case, in the second one, there will be registration taking place because you didn't register the new amount already. So we are going to register a new bond. Different banks have different criteria of doing it and different ways. With other banks, you can have what they call multiple accounts. So even though you have the main account of the main bond, the secondary one, the re-advance, you can put in another account with its own name and its own time, interest rate, and the time and everything. The other banks, they put everything together, so it becomes a new big bond. Again, on that one, you must decide when they put it together, do you want it to go with the remaining term of the bond, or you want them to take it back to 20 years again? So those are some of the things that you must be aware of, and you understand the difference in terms of the interest rate. What it means is that if they put everything together again and back to 20 years, it means you're going to pay interest for 20 years on the big amount again. So as if you're starting afresh. Instead, whereas when they keep it at the same term where it is, the interest, your repayment will be adjusted. So you are going to repay a little bit more every month. The other thing that I normally say, this I normally discuss in my seminars, but it's just to, let's say you have a company, like you're saying, you want to buy property in a company and you need the 20% deposit, and you already have an existing property. That's where you can get your 20% deposit. You will refinance the existing property, and the money that is available will be used as deposit towards the purchasing of the other property in the name of the company or the trust. Yes, that's what we do.
Yeah, I have employed that strategy several times. Where, for instance, if I've paid my one bond to a certain extent and I need to purchase another property, then I go to the bank and say, may I please have, that is the re-advance, may I please have the money that I've already paid in my first bond. And then I take that money and then I use it as a deposit or whatever the case may be. Even if I want to do renovations, I use it to do renovations on the second property and then go on and with the investment.
And that's one thing that most people are not aware of, or they're not using their home loans. You can use your home loans actually as your bank, and you use the existing property to assist you to build your portfolio. So most people normally refinance their properties, take out the money, and they don't use it for something that is valuable, or later then you are sitting with that big bond again. I always say when you take out money from the bond, you use it so as to increase your property
Your portfolio.
Use it to buy other properties and invest in other properties and over and over and over, and that works. I also have situations where another way of getting money out of your properties, if you have properties in your personal name and then you want to move them to the company, and that's the other thing, because you can sell them. Let's say you have 2-3 properties that are rented out and they're in the personal name, because remember, when you have all the properties in your personal name, they affect your affordability in future. You'll come a point where the banks will say, no, you're over exposed, so won't be able to assist you anymore, because they'll always look at your personal affordability. So what you can do is to sell these properties from your personal name into the company, that your company, even though you're the director of that company, in that case, it opens up your personal affordability, and you can buy more and more and more properties, but in the name of the company. I hope it makes sense.
Yes, yeah, no, thank you for that. And what's this now? Sbongile. She's asking again, what are the penalties if you repay your bond or reduce the period of payment? Before you answer, Anna, I just want to say, Sbongile, that if your strategy is to grow your property portfolio, you can obviously always reduce your bond, but you must never pay the bond in full. Just keep it open, because like we've just said with Osana, that if you have your bond open, you can always go back and access the money. But maybe Osana, then you can then talk to the penalties that she's asking. If you reduce your bond, I don't think there are any penalties. But what happens if you pay the bond off before the period? Are there any penalties there?
The only time is if you settle it, if you close it, the banks will always charge you 90% interest on that particular bond. And like you said, that's not something that we always recommend, especially if you want to be a property investor. You must always keep that property open for it will be more like your savings, where your money will be. So you know, if you pay early, you can always pay. There won't be any penalties. Instead, you are saving in terms of interest, because if you're going to pay interest over 20 years, now you're only paying the bond off in 5 years. By off, I mean reducing it, not necessarily closing it. Then you are saving in terms of the interest that you would have paid for the coming 5 or 10 years.
Yeah.
The only is
let's touch here also, Anna, on the access bond facilities. I'm not sure whether it's called access bond in all the banks, but you just said now one can use the mortgage bond as the bank account. Maybe let's just touch on the access bond facility.
That's the facility that I'm referring to. That's the one that I was referring to, whereby we release the funds. It's the same thing. Okay, let's say you have like this property now of 500,000, and you are paying, instead of paying 3,950 every month, you are paying 6,000 rand every month. The difference will go into your access facility, but you must make sure that your bond has that facility. Different banks, different strategies, against different criteria. Other banks is automatic. With ABSA, as soon as we get an home loan approved, then they call it flexi reserve. Again, different banks use different names. So with ABSA, it will automatically be available. Standard Bank, I know you have to apply for it. That's the access bond with Standard Bank. FNB as well, and NetBank, you must just check with them. I think you always have to make sure that you have that facility. What that means is that when installment is 3,950 and you pay, let's say 6,000 rand, the difference will go into your access facility. It's within your bond already. All that it means is that everything that you are paying extra is available for withdrawal should you need it. That's the only difference, but at the same time, it goes towards your balance. So when you do your credit report, even though you might be owing, you have a bond of 500, let's say you have access of 250, it will show as if your balance is only 250, even though the other 250 is the money that you can access.
Yes.
I hope it makes sense.
Yeah, no, it does. And I just want to add there that this is a very intelligent financial strategy.
Yeah.
where you, instead of leaving your money to sit in your savings account, you earn 5% interest, or in your current account where you earn close to 0% of interest. You rather just put your money into your
bond,
your bond, where you are saving 11 or 10 or 7% as compared to the 5% that you will be gaining. So if you have got extra money, always try to put the extra money on the bond account.
Exactly.
Yeah,
that's true. That's so
and
true.
then Mashidi wanted to just confirm, does it mean a company which is less than 2 years won't get a loan from the bank if it requires 2 years financials?
It will. It's not always 2 years financials. It as long as the director of the company qualifies for the bond, that company will qualify automatically. It doesn't necessarily have to be 2 years.
Okay.
Yes.
Zolake wants to know, how long after buying your property can you refinance that property?
It depends on the value of the property at the time of buying. Let's say, especially like I said, now more properties will be available in the market, and maybe you are able to negotiate for lower price. Let's say the value, if the value is 1 million and you're able to get it from the seller for 800,000, as soon as it's in your name, you can always refinance.
Yes. And
so it's always based on the, it's based on the value of there must be value for whatever amount that you want.
And Zolake, that's why I'm so excited about the coming period for those that will have the opportunity to take the investments that will be coming on, because we are going to get investment at a very low prices.
Yes.
We've got opportunities that we can refinance that as soon as the economy picks up in 3 years, 5 years time, we have an opportunity to refinance those investments that we'll be getting them now, which would then mean that we've got a higher chances of creating very big property portfolios in 6-7 years time, just by using the opportunity that will be coming up towards the end of this year and early next year.
And the interest and the low interest rates as well.
Yes. Yeah.
And then normally, not always that the bank give prime, but they'll give, if we say it was still, it's still good to still get, I think the lowest that we got now was prime plus, we're on 7.25, so 8%. It's still a very good interest rate, very good rate.
Yeah, so you must not be too excited and take up loans and that we cannot afford to pay once the interest rates start rising, because they will start rising. So as we as we finance these properties, we must make sure that they are good investments as well.
Good, thank you, and I'm happy that you raised that one. I nearly forgot to credit when I was talking about credit report and credit score. One of the things that affect your credit record or your score is the number of accounts that you have that you opened recently, especially personal loans. When you take out a personal loan, when you take a vehicle finance and clothing account, the credit bureaus tend to look at it in a negative eye. So it affects your score. It drops your score drastically depending on the amount that you took as well. The other thing is, remember, the interest rate on a personal loan is far much higher than in a home loan. But when I do your affordability assessment, or when I do your credit report, no one will be able to trace it out. That it doesn't leave a footprint, because we do it as if you are looking for a home loan, and the credit bureaus take home loan in a positive light.
Yeah, and this subject that we're touching on now of interest and using your access bond facilities, it reminds me of this. Where is it now? How come you can't see it? This book, I know you can't see it, but is Increase Your Financial IQ by Robert Kiyosaki.
Yes.
Increase Your Financial IQ by Robert Kiyosaki. My background screen is taking it off. I will just take off my background screen, and then so that I can show it to you. You need to, if you want to be successful financially, you need to read this book, because it shares with you secrets in terms of how other people are making money out of debt out of good debt that they already have. For instance, with this access bond and not paying your bond off, should you, which is not advisable, but should you at some point require a personal loan, or you want to buy a car, you can still use the access bond
Yes.
you can still use the money that you have paid in your bond to
Mm.
buy the car, but you must just make sure, because of its car is a bad debt, you must just make sure that you pay it as you would if it was a vehicle finance, so that you can get rid of it and have your money available for you.
Yes.
Continue with your investments.
Yeah.
Yeah. No, I get excited when we come to this part, but yeah.
But and that's the other thing. Remember, financing is the most crucial part of. You can fund properties, you can do everything, but if you can't finance them, then everything is stuck. So this is the main thing, and you have to know how to do it smart without really losing a lot from that, because it's possible to get the banks financing everything and you don't even have to pay for anything. I also had situations whereby the bank even financed for the renovations. So we submit an application, we get it approved 100%. After it's approved, we send the quotations for the renovations, and the banks, again, everything is based on affordability. Then they approve the renovations, and then you just put in the tenants there, they pay the bond. So you got it free.
Yes.
The bank paid for everything. You just got it free, and you put the tenants are paying the bond, and there's nothing coming out of your pocket. And that's how you must do it. It's a smart way of doing it.
There you go. With regards, Velaki wants to know, with regards to building township rooms, what mechanism one would use to approach the bank to get finance?
It depends on the property that you are building at and the area. Is it rented? Is it bonded? That the house itself that you'll be building in. Another one can be, like we're saying, if you have another property that has equity, we can refinance that particular property. You take the cash from there and you use it to build the house, the rooms at the other house. That's another option. Again, if you want a building loan, the banks can still do that as well. They'll need the renovation, they'll need the costs, the building costs, NHBRC certificate from the builder, and we apply then for a building loan. They will approve that.
Yeah, and then there is someone on Facebook. He wants to know why would it be a good idea to put extra money in the bond and not pay off high interest debts like credit cards. And this is where financial intelligence come in as well, because when you have bad debt like credit cards, you then need to start with the high. You must rate your debts. You start with the ones that are high interest rate, and then you pay those off. Then you can come and then start dealing with the ones with the lower interest rate.
Yes, that's
I
true.
don't know
I
if
agree.
you've got, yeah.
No, I agree. Like I said, I come from the banking background, and I used to be a sales manager. So yes, you always start with those accounts. Like I said, your interest rate in a personal loan is so high. The other day I was doing an exercise with someone who wanted to buy a property for 200,000, and I was showing that person. She already has a loan for 200,000, whereby she's paying something like 3,000-4,000 rand a month. Whereas when we do a home loan for 20 years for 200,000, installment will be around 1,000 something. And that's what I was saying. Yes, the interest is long term. Is with time it will be more than what you are paying now.
Yes.
But cash flow. That's the main thing. And that's what the banks look at for your affordability, to say, can you afford that property? When you have a short-term installment like a vehicle finance and personal loan, the interest rates tend to be higher. So you must just look at the interest rate there, even though it's short term, but the interest rate is high. It's sometimes 2 times 20%, 20% interest compared to 7.5 interest. The two are it's just too much. So yes, firstly pay the one with the high interest rate, and then when you say put money into your bond, that will be your extra money. That will be you're referring to the money that you'd have put into your savings account. Or if you got a bonus and you want to save, instead of putting it into a 32 days notice, instead of putting it into your money market, we are saying put it into your bond. So the money that we are referring to is not for the debts, but instead for your saving.
Yes, and Kutlwano, Facebook, she wants to know, how does the color of my skin affect my application? Let's talk about this.
It doesn't affect application at all. We have agreements with all the banks, and the applications are based on affordability and credit record. We fight for every deal to go through. If it goes through, what we normally do is we'll apply to all 4 banks. And once they're approved, I'll be communicating with you. So I'll tell you, this is the approval, this is what we have from this bank and this bank and this bank. And then you tell me which bank you want. And then you go back if we feel that the interest rate is still a bit high, to say, we want to take your offer, but we feel your interest rate is high. Give us a lower interest rate. So the banks are always willing to motivate. It has nothing to do with your color, the color of the skin.
Yeah, and let's just ask this question, just in general now, are banks considering Black people as high risk as compared to other races, or the banks, they just consider application as applications?
Application is dealt with as an application. Remember, the banks are in the business of making money.
Yes.
So the more applications we submit to them, the more approvals they give us, the more money they make. So for them to look at the skin and say this, and we know that most number of the Blacks are actually majority in our country. So it won't make business sense to say we will consider this ones and that one. No, they're in the business of making money, and the more applications they can approve, the better income it will be for them. Banks make money through interest. So the more interest we pay, the more money they make from whatever that they are doing. So they do approve the applications, irrespective of who you are, irrespective of your race. It's just an application. The property, firstly, must qualify. What we do is, once the application is approved, when I say been approved, the bank will firstly approve in principle. It means they approve the buyer, whether a company or individual. Then they go out, they do valuation, and then they come back and they approve the property. So all those things must be in place. If the buyer can afford and the property is suitable, the bank will always approve. It also takes, once we have all the documents and have submitted, it takes 2 to 3 days to have the final approval from the banks, depending on which bank it is.
Okay, we can go to town with politics around how businesses around how business treats Black people, but I think let's leave that subject. Let's just assume that the banks are fair to all of us. I think the next question.
I think maybe to add to that one, sometimes it's because of not understanding how the banks operate. That's why people tend to think. Remember, sometimes you walk into a branch and you're just told you are declined. Nobody tells you, why are you declined? What is it that we can do to assist you not to be declined? Other things is that people get approved interest rate, but not everybody knows that after some time you can always go back and say, bank, I want a better interest rate. And that's the thing. Even if, let's say, we are approved now for 10%, the bond is approved for 10%, you can still pay your bond for 6-12 months. Then you go back to the same bank and say, please relook at my interest rate because I feel that it's higher. They'll always look at it and they'll give a better, depending on how you've been paying for the past, for the time that you had the bond.
Bongs on Facebook, he missed the part where you were speaking about refinancing, whether the term or the interest rate change if you do refinancing or readvance.
Yes, it does change. It depends on the type, like I said, different strategies and different banks. You can refinance your property, and then maybe, let's say you have an existing this property now, the big bond, you are given 10% interest. With ABSA in particular, they have what they call multi-accounts. multiple accounts. So if multiple accounts, the next refinance that you do, it can be a new account with its own interest rate and its own term. So this means that the original bond remains at that interest rate and the term that is on, but the new one will have a new term and new interest rate. Other banks, what they'll do is that when you refinance, then only the portion that has been refinanced will have its own interest rate, and the main bond will have the other interest rate, but it's still one. Or they can still change the interest rate completely for the whole bond and put everything together as one bond. I hope I've answered the question.
Yes. And then Taban wants to know, how is the affordability calculated?
It's always 30% of a gross monthly income. Basic salary, gross monthly income, 30% thereof will give you your monthly installment, and you multiply it by the interest rate that you are at, and you'll get your repayment, your big bond. Let's work on, for example, I always use the example of 10% because it's easy to understand. When your gross monthly income is 10,000 Rand a month, 30% thereof will be 3,000 a month, 3,000 Rand, which will be the installment. So for an installment of 3,000 Rand at 10% interest rate will be a bond of 300,000.
Yes, and then Brutus wants to know if he can do the application online or does he have to visit your office? How do you work?
We work online. We are strictly online. We've helped so many people online that some of them we never even met. You can go to our website, www.batupilohomes.co.za, or you give us a call on the 087 number on the screen. I will send you a form. On our website, there's a form. There's an affordability assessment form that you can download. You fill it in and you send that to us. We'll do your affordability from there. What it means is that you'll pull your credit report and I will be able to discuss it with you. I'll send you an email telling you how your credit report looks like, what your chances are. And if you send me your bank statements and pay slips as well, then I'll give you a pre-approval certificate.
And that means you can service anyone, anywhere in the country. It does not have to be in Gauteng. You don't have to come in to sign documents in the office.
No, as long as you're in South Africa, we can assist anyone. After we are done with the application, it will be sent to the attorney in your area. So you will sign your documents at the attorney's, and it will always be next to where you are.
Semi asked, is it possible to do a joint bond with someone who works or stay overseas, a citizen of another country?
Citizen of another country stays in, yes, and then where the person works there and is a
South African
one. Yes,
yeah.
the banks, not all the banks will loan, they will require deposit as well, definitely. It won't be 100% bond. South Africans working abroad, yes, we are able to assist them 100% bond.
Okay. Ladies and gents on Zoom, I'm not forgetting your questions. It's just that it's going to be easy to get back to them. I just want to finish the ones on Facebook. This is the last one. Jay says, please clarify this for me. You buy a house of 700,000 with the bank finance, it will be about 1.4 million. Then you decide to sell your house after 4 years for maybe 900,000. What happens to the remaining bank loan amount since you were owing 1.4 million?
You bought the house for 700,000.
Yeah, you finance it with the bank, it becomes 1.4. I think what he has done, he has taken the full amount of the debt, because what happens normally is that you pay at the end of the home loan, you pay double and 3 times the price. I think that's what she has done.
Yes. Remember, there's the interest. When you settle it, when you sell it, you are not liable for the interest that is still to come. You're only settling at the balance, at what is due. That's what I understand, correct? Okay,
Yes, yeah.
this is what it
Yeah.
means. Isn't it that the banks now have to show you how much you have paid in 20 years? So it looks like it's a big amount of 1.4.
Yes.
You bought the property for 700,000. You owe 700,000. You don't owe 1.4 million. The interest that you would have paid over 20 years would have been plus everything would be 1.4. So if in year 5 you sell the property and the balance of that property is maybe 650,000, then you're only owing 650,000. The only penalty that the bank will charge you is 90 days monthly installment, which is 3 months installment. Yes. So no, there's no other amount that you are owing. They are settling the balance as is, and you can move on.
Okay. I think after the call, you must just come to Facebook and find the live recording and then just put your contact details there. Sammy wanted to know your email address.
Okay.
And then Bongan wants to know what documents are needed if I want to buy a property through a company that's recently been established or has not been operational since establishment. Any need of annual financial statements?
And he's full-time employed. So it will be your 3 months pay slips, 3 months bank statements, registration documents of the company, and the letter from the accountant stating that the company is solvent and not trading. And that will be it. So we'll base the application and approval will be based on your personal affordability.
Yes, and there's been a lot of misconception around this.
Yeah.
When I started investing through my company, it had not traded, it had no income, and I put my first property there, and then since the bank financed it based on my affordability. So the bank relies mainly on your personal affordability, then it will finance the property. But then it just becomes much more easier when you do business through a company as compared to your personal name. Like for instance, Anna has already said that with your personal name, you are going to reach a ceiling, your debt ceiling a bit faster than you would if you were
in a company or a trust. Yes. But one thing, normally I know people say they always want to buy in a trust. I just want to clarify that one of a trust. Yeah? It's always better to buy in a company than a trust, in the sense that in a trust, most of the time the banks, let's make it. A trust can't pay you salary as a trustee. Whereas in a company, as the director of the company, you can draw a salary from the company. So you get people where maybe at the moment you are still employed and then you buy properties in the company and those properties are rented out and the rental income goes into the company. So that's the income of the company. You can later draw a salary from that income. When the properties are in a trust and the trust has properties that are rented out, you can't draw a salary from the trust. So that's why I'm saying, because you always have to prove affordability as the director or the trust of the trustee of the trust. Then when you have another income from the business, you can have your basic salary and also say the business is also paying you this much. So it increases your affordability long term.
Okay.
I hope it makes
can
sense.
I ask you to stop sharing your screen?
Okay.
Yeah. And then what Sbongile wanted to know, what is the process of selling your property into your business? I think she's referring to what you said, that if you currently have properties under your name, you could sell them into your business. So she wants to understand that process.
Okay, we'll have an offer to purchase. I'll send you an offer to purchase. You will be the seller and the company will be the purchaser, it will be the buyer, but you are going to sign as the seller and the buyer at the same time because you are the director of the company. So it will be only your signature on that and we can process that application. And what we normally do is depending on the value of the property, because I said the company can only get up to 80% bond. Then we will put the on your purchase price will be such that you are able to cover the 80%.
Yeah, I just shared my screen of the training that I'll be conducting on the 4th of July, where we'll be talking about the investment structure as part of the things that we learn on the 1st of July. The investment structure in terms of how one should structure his investment portfolio such that it is tax efficient and you are able to build a legacy, because if you have properties that are under your name, should you die, those properties must be wind up as part of your estate. Whereas if you have got it into an efficient structure, then they can live longer. They can outlive you if you want. You can build a legacy as part of your
Exactly. Yeah, and that's very important what you're going to share, because we come across a lot of that. Especially, I spoke about marriage. Remember, when you're married in community of property, even let's say you buy a property now, it's in your name, and then later you marry in community of property, it becomes a joint property. It's not your property alone anymore. So it's for everybody. And when one of the partners pass away, please make sure that there is an insurance in place. So every time when you take a property, home loan approved, make sure you have life cover. Because I've seen many people who come back and you find that there was no life cover in place, and now you are left with the debt and you have to sell the property.
Yes, yeah. And now you're touching me on my other studio, which is asset protection, which is also very important if you are serious about property investment.
Yes.
And will the bank accept that? I think we've asked that. Let's just go on. Can you use a paid up property as surety to apply for a home loan to acquire an investment property?
Yes, we do that a lot. In that case, you'll be having the title deed with you already. So what we do is we refinance that property basically. It's not owing, it's paid up, you have the title deed. So we go to the bank and we say, bank, we need maybe 500. And normally, I don't normally advise that you go for 100% of the value of that property. So you can take 300,000-400,000 from that. And once it's approved, then we keep the money back into that bond. Like we explained about the flexi reserve and the access bond, into the bond until you've identified the property that you want to buy. Even with the second property, we can still do home loan finance on it. Then the other one, the money that we got, we are going to use as deposit or to pay for the transfer cost or any other renovation cost that you're going to need for the other properties. So you're using this one basically as your stepping stone to help you to build your property portfolio.
Okay. Do you want to say something?
No, I'm fine. Thanks, Jimmy. Great session, and hi to Anna. So I have used the services of Anna before, by the way. Great service.
Thank you.
It's a pleasure here, Anna.
Yeah, thanks, my brother.
Yeah, no, great service and very interactive session, Jimmy. Thanks a lot, man.
Okay,
You're welcome.
Sure. Thanks, brah.
Thanks a lot.
And then Eunice wants to know.
I've also on Facebook, I've put in the email address now.
Okay, no, that's fine. Yeah. Thank you. So she wants to know, is it advisable at the moment fixed or variable interest rate?
Variable. I've looked at one bank so far for fixed interest rate. It's not that bad. The banks review the interest rate every 5 years. So if you fix, they always fix above prime. So it's a personal decision whether you want to fix or not. Currently, it's still okay with variable as well because the rates are low.
Yeah, my view, obviously I'm not the expert on this matter, but my view on fixing interest rate is that the banks, for starters, banks will never do anything that will make them lose money.
Yes.
And they've got more resources than you have, which means they are able to forecast in terms of what's going to happen in the future. And then they will fix interest rate, like you just said now, at a higher rate than prime. And at that rate, they will foresee that in the next few coming years, we're probably not going to reach that rate. Or if we reach it, you are still going to be the loser, you as the consumer, if you had kept on the variable interest rate. So for me here, the point is that we must just be disciplined as people, learn to manage our money behaviors. Because the reason of fixing interest rate is that you probably don't want the stress of when the interest rate increase, then you won't be able to afford the repayments. And then, but when the interest rate decrease, like what has happened now, you lose a lot of money. You can imagine people that fixed their interest rate in January and February this year. You can imagine the kind of pain that they are in at this point in time with their certainty. Life is not about certainty. So my advice is that let's just try to be disciplined. When interest rates are low, keep the money in your access bond so that when interest rates start being higher, you are able to access the money to cover the repayments going forward.
That's true.
Sbongile wanted to know what about taxes, but I'm not really sure what she wants to know there. But Sbongile, like I said just now, if you attend on the 4th, we are going to touch on that subject. I said before that these sessions are very short, and Anna mentioned it as well. These sessions are very short, and they are not intended to cover all the aspects, for instance, in this case, all the aspects of home loan application. But it's just to give you an overview of what is it that you need to look at for you to be able to do whatever that you need to do at that point in time. But that's another reason why I then decided to have these sessions so that we can then consolidate whatever that we have learned in the past few weeks. Sbongile also wanted to know, does Batupili also offer home loans or just bond originating?
Home loans meaning property? No, we are not estate agents. We are strictly bond originators. What bond originators do is that we have agreements with the banks, so we assist with the facilitation of a home loan application, and we are paid commission by the banks, by the way. So my service to you is free, and the information and the education will just give as much as we can from our side.
I think what Sbongile wanted to know is whether do you offer the loans themselves.
Yes, it's the banks. It's the banks that offer them. No. No, we don't have money at all. No, we don't do the home loans. We submit to the banks, major banks, the big banks, and they are the ones who are financing.
On the issue of you having agreements with the banks, I had an interesting call this week by someone who thought I was an estate agent. Ekasi Properties was an estate agent, which is not. In fact, it's something that I will mention at the end in my closing. We are not an estate agent. We just created this platform so that we can have these conversations. But this person says to me that there are bond originators that have got agreements with estate agents. I don't know whether, I just wanted to know whether those disadvantage us, those kinds of arrangement where you have a bond originator having owned by an estate agent, does that in any way disadvantage us as investors?
Most of the time is, especially when you don't have a relationship with the estate agent, what they do, like I said in the beginning, the estate agent will take your application and they give you to the bond originator. You as the buyer don't get to ask questions that you want to ask. The bond originator doesn't even teach you about other things that you should be aware of. And when your application is approved or declined, they will give the information to the estate agents as well. In my case, it's the opposite. I work for you. So if you send me your offer to purchase, I will be liable to you. I will be giving feedback to you. If you want to give it to the estate agent, you will do it. I won't give your information to anybody else. So that's the only thing. And I'll also be showing you. We sometimes find that with the estate agents, nothing bad, but because they want to get the deals closed, they will push for the first deal that comes and say, take it and then let's go. And I always tend to fight with a lot of estate agents for that, to say that's unfair to the buyer because we didn't compare what the banks offer. So yes, that's one of those things. But yeah, you also get estate agents that have in-house, like you're saying, bond origination. So they do everything in-house. And they also tend to threaten our investors and say, I'm the one who must get you finance. You are the buyer. You have a choice to choose who must do your finance for you. They even put it in the offer to purchase to say, we will get finance for you. So what you do is to take that offer to purchase, you scratch that part that says, we will offer, and you put there, I will get my own finance. Because you have a right to either go into the bank and apply directly, use any bond originator that you want, or use their bond origination. So it's not a must. It's your personal choice.
Yeah, and that's what you just said. It's also critical because what we do normally when we buy, we are active when we finding, hopefully we are active when we find the properties. Once we find the properties, we let the process run on its own, which means we just let the agent to decide for us what happens next. But now what you are saying is that once you sign the offer to purchase, or in the process of signing the offer to purchase, also decide who you want to assist you in obtaining that loan. In this case, we have you that House Anna that can assist us in obtaining the loans.
Thank you. And what I would have done is, firstly, the first step that we must do is to get everybody pre-approved, because the estate agents want to see pre-approval certificates. So once I've pre-approved you, I've given you the certificate, you just tell them, this is my bond originator, so I'm going with that person. They won't ever say on that. So yes, that's true. Any other question?
One last question. That's what she says, and in fact, this will be our last question, unless someone wants to speak for themselves, because we are edging closer to 11:30. I don't want these sessions to become too long.
Yeah.
If anyone has got any further questions, obviously Ausana is available on Facebook. She has given us her contact details. We can always ask her, or you can ask me, and then if I'm not really sure, then I will contact Ausana, then get you the answers. But she wants to know, Khumutso, as a last question, unemployed but want to buy an investment property using paid up house as surety. Is it possible?
Paid up, or does it give rental? Does it have rental income?
Let's assume no. It's just a paid up property.
In that case, unfortunately not. Remember, the banks wants to see income, monthly income coming in. So yeah.
if there is income from rentals, then they will take that income and consider it.
Yes, even though they don't use 100% of it.
Yeah. How much do they take?
Different banks, again, different percentage, 80%, 60%, depending on the bank.
Okay.
But then you will be using that income as your salary as well. It depends where it goes. That's why I always say, if it goes in a company, it becomes even better, because then you can pay yourself a salary from the company, you see.
Yes.
Now the company has income, you pay salary, then you use that as your salary.
And Isa wants to know, or I think it's Kutlan, wants to know if Stockfell can buy houses.
How many people?
Yeah, no, I think Kutlan, I think this one we must skip. We can have a discussion, me and you. You can give me a call. I'm sure you can see my contact numbers. You can give me a call, and then we can have a discussion. I can refer you to relevant people. But in your short answer is yes, they can. Yes. But obviously it depends on how you structure it.
Yes, and the agreement must be in place as well. You can even buy property as 3-4 people, 3 siblings or 4 siblings. You buy property together. But always remember, when one of the buyers is married in community of property, the spouse must also sign with you.
Yes, yeah, but yeah, also that it also depends on the structure. You can do it, but it's advisable to do it on a structure. Yeah. Let's take this one, last one for you, Facebook as well. Me and 5 friends of mine are interested in collaborating, buying a land and building houses on that land. then we sell them, we sell some of the units we will build. Now we just wanted to know what's the best way of doing this. Taban. Let's like she's asking the question that we just answered, that it is doable, but if you want to know the best way of doing it, maybe a different platform would be better for you. Get my contact details and let's have a chat on that one. Yeah, let me just check whether there is anyone who sneaked anything. Where do I find my chats again? Let's go. Okay. Looks like everyone has behaved. Ladies and gents, we have reached the end of the session. So you guys can turn on your videos, or you can unmute yourselves if you want to say anything. But this is the end of the session. I just want to thank you, firstly, for attending this session, and for you, Anna, for sharing this vast knowledge with us.
Thank you.
I also want to thank you, ladies and gents, for helping us to grow the platform. We have two platforms, Ekasi Properties, which we are going to use in future for these discussions, and to advertise, for you to advertise your properties. Ekasi Properties, like I said, is not an estate agent. We created a platform so that we can open it up for our people in the township or wherever you are to advertise your property needs. Like I always say, that means if you are a plumber, you can advertise at Ekasi Properties. If you are an electrician, you can advertise. If you are a tenant, you advertise that you're looking for a place. If you are a property investor, you can advertise your needs. But I think most importantly, Ekasi Properties, we created for it so that we can have these kinds of conversations. And the conversations will happen mainly on the Ekasi Properties Facebook group, where property investors can raise issues related to their investments. And now, currently, the Ekasi Properties Facebook group, we are sitting at more than 11,000 members. And Ekasi Facebook page is sitting at 1,000 members. And I want to, again, just thank you for growing the platform. But I want to request you to ask your friends to like the platform, because if anyone leaves, and that person needs a shelter, and you are going to get the shelter and how to get it better if you join us as Ekasi Properties. And if you have not liked Ekasi Properties, the page now, I want to ask you to like it and also just help us to advertise it, because this is where these very important conversations are going to be happening in the future. I think other than to say that's it from me and everyone else in this call, and I thank you. I will see those who have decided to join us on the 4th of July. I will see you hopefully on Wednesday. So we'll be talking about the case study, and then see the rest of you again on Saturday in the course. But for everyone else who has decided not to take the course for now, for whatever reason, I will see you, I think, in 2 weeks' time, where we're still gonna decide in terms of what to take on. But I think in 2 weeks' time, we are going to have a town planner who will tell us in terms of when we build those rooms, what kinds of laws and things that we need to look at as far as the municipality regulations are concerned. But other than that, that's it from me and Alsana for this Saturday. I want to wish you all the best in your investment going forward, and may you continue to thrive and to break the cycle of financial illiteracy between in our families.
Yes.
That's it
Thank
from
you.
me.
Thank you for inviting me. It's always a pleasure to share the knowledge with everybody out there.
I know. We are indebted to you, Asana.
Thanks.
Yeah, okay, that's the end of the formal session. So if anyone wants to say anything, this is the time. But otherwise, we'll then, I'm just looking for my recording.